I am delighted to welcome as my guest Mark Braun, a business leader, chairman, NED and investor with a phenomenal record of turning around recruitment businesses' performance and shareholder value. We're going to delve into Mark's journey, his experience, and also his observation of what business leaders should be focusing on more, what pitfalls to avoid that he sees too commonly in his advisory capacity. Beyond that, we'll also explore what's on the mind of investors. So whether you're a seasoned entrepreneur, a business owner, or just someone curious about the inner workings of creating shareholder value, you'll enjoy this episode and Mark. A very warm welcome to the TRM podcast to Mark Braun. Thank you for joining us, Mark.
My pleasure. Lovely to meet you again.
So you've got various hats, chairman, director, NED advisor, and investor. For those people who maybe don't know you, are you happy to just give an overview of the journey? I'm actually quite interested in how you went from IBM into the world of recruitment, but it'd be interesting to hear the journey that took you here.
Well, funny enough, recruitment was first. I was actually at Manpower before I joined IBM. And okay. I learned the trade at Manpower, which back then, which is an awful long time ago, 35 odd years ago, I thought they had a fantastic methodology, or analog, of course, not very much in the way of computer tech. But they had a very good approach, I thought. They treated both the community of what we would term contractors or temps as customers in the same way as they did the bill-paying customers. So I learned a lot there, and I won't bore people with my journey there, but that was a really enjoyable one. And it allowed us, I say us, my wife and I, we worked together at Manpower in turning around part of their business where it had been failing. And because of what was called a reverse takeover by the then Blue Arrow Group and Tony Berry, we decided to leave because we didn't feel we could deliver the same quality of proposition that we had been delivering, and we set up our own business called Barker Personnel. And that was the point at which I joined IBM, because in those days restrictive covenants had not been tested in the courts, and so we just wanted to be very protective of the business. And it was a fantastic experience because my wife led and built a fantastic business which was acquired 13 years later by Carlisle, which was owned by Lord Ashcroft, and it was a very rewarding sell of the business. And I'd had a great journey at IBM and learned loads. I was there in the original Acres days when it was failing, and then was part of the turnaround of IBM. I was part of the 200 global managers tasked with trying to help change the organization under Lou Gerstner. So again, learned a fantastic amount at IBM in sales and marketing. That was my where I sit. And in the journey from there, having sold a business, having 3 kids with a 4th on the way, having had a great career at IBM, and got out with a fairly good payoff from options that I had as part of that team, we then sat on a beach for 12 months and right. Sort of thought about what we should do with our lives. And I didn't realize that I was unhappy until I went back to work. I was unhappy doing nothing. Anyway, the next 18 years, so 2000 through to 2018, I've been involved in successive business turnarounds as basically the leader, CEO, whatever title you want to give it. 2 or 3 of those were in recruitment, and 2 or 3 of those were in technology businesses. So I've tried not to be sort of pigeonholed into one space. And when we talk about turnarounds, typically a turnaround is something that happens within about 6 to 9 months. But then you're trying to grow a business and become the market leader in your space. So that sort of period of time I've spent with each of those 6 businesses over that 18-year period, you've gone from turnaround into then high growth and then exit of some sort. So a little bit like the sort of private equity journey that people will be familiar with, but we've done that sort of 6 times. And in 2018, again, I decided to take a break. Started doing some advisory work. I was involved with a couple of recruitment businesses, one modest in size, one fairly large in size, basically both of which wanted to find the exit door at a tough time in the market. So each of those took a couple of years to help through that process, and both were very successful. One was an MBO and the other one was a trade sale. And whilst all that was going on, I have spent some time in listed companies and built a relationship with a number of investors that are institutional investors, and also with a small number of private equity firms. And basically, since early 2018, I've been asked to get involved with certain projects. Some have been turnarounds, some have been actually growth projects. And I found myself at the beginning of this year, basically as chairman of 6 companies, which might sound like a lot, but I'm not retired. And being a chair depends on whether you're a non-exec chair or an exec chair. And I'm an exec chair in 3 companies, and was a non-exec chair in 3 others. It actually adds up to being a full-time job. We've actually sold one of those businesses now, a technology business, which was private equity owned by Carlyle. That was a very successful sale done in February of this year. I have one other technology business, quite a large and fast-growing technology business that's private equity owned by ECI, called BCN, based up in Manchester. Fantastic technology business that is. I have a couple of listed companies where I'm chairman, and I also have another technology business which is in the workplace technology market. That's a global business, but they're headquartered here in the UK. They've got offices in the US, South Africa, India, and Australia. And then a final business, which actually is one that I've part founded, which is called CRM Squad, which is it's a revenue operations and marketing business. It focuses on helping organizations turn marketing spend into revenue, which is often the secret sauce that many people miss out on. It's got some great technical capability in terms of helping people use their CRM far better, but also in terms of providing fractional support to help companies grow. So that's the journey. And we're having fun.
And you're not near the beach, certainly with that
No.
your current portfolio. There's a lot to keep you busy. I want to delve into the kind of leadership lessons that you've learned and your experience of working with organizations and turning them around. But is the skill set that you've got as a turnaround specialist, somebody who's been able to turn a business around, get the growth and take them to an event, is that different from and if so, how is it different from simply running a successful recruitment businesses and scaling it? Is there a different capability?
I don't believe so. I think that it's more a mentality. I personally tend to get bored when things are going very well and going very well for a long time. So I probably am not the best leader of a company that maybe has got a 5 to 10 year perspective of wanting just to carry on running, a good, simple business. I like to be challenged, and I also like to create a business that's the best in its space. Now, as I say, that turnaround piece is just the very start. It's then about, what's the mission, what's the focus, and how do we become the best at what we do in our territory? And that's what we've attempted to do, and in a number of cases have done in a number of the businesses that I've operated in. And frankly, those are the skills that are needed to run a great business. You just need to have the mental capacity, which I feel I don't have, to then, once you've got there, to keep it going. So the skills are no different, in my opinion. Great leaders of great businesses are pretty good at spotting what challenges, sit in a company that's not doing very well. And typically they are simple problems. They are not difficult to fix.
So is the turnaround almost a bit of a mindset, as in we're going to up the game significantly here? Because you talk a lot about how do we generate gains in performance and create shareholder value. That seems to be what you're very focused on when you're doing your turnarounds. Is that a mindset that maybe we should all consider a little bit more?
I think so, in that we operate in an ever increasingly competitive environment. And, there are a few markets that are as competitive as recruitment in the UK, for example. And what that means is I think you've got to constantly be reinventing yourself, or be satisfied to set up a business that you can optimize and make money from based on a simple single proposition. The fact is that the market moves at a rate of knots, and therefore, as I say, I think you do have to keep reinventing to make sure that your product is relevant and viable to a customer's needs. The biggest mistake I think many business owners or business leaders face, I think, is when they're not out talking to customers. And in the recruitment context, I do believe that customer is two communities. It is the community of people that pay the bills, the end customer that has the work done for them, and it is also the community of people that you're putting in front of those, or putting to work with those end customers, the contractors, or the resources, or the consultants, or the temps, or whatever description of recruitment business that you're in. That is a customer community and needs to be treated as such. And they all have a very changing set of requirements as the market moves on. One of the biggest challenges I think a lot of companies face is that they're unwilling to change. And people hear this comment about change all the time, and sometimes they sort of pay lip service to it. But it's a fact. The market, I've been involved with the recruitment business for 35 years, and while some of the core principles are the same, customers, those two customer communities, through different advancements, have learned to want different things, and you've got to be able to attune to that desire.
An observation, we did some work probably 10 months ago where we were looking at the strategies TRN members had in place from in terms of the candidate strategy, because an observation was the candidate, even though we spend an awful lot of our time finding them, marketing to them, sourcing them, engaging them, placing them, etc., they quite often in the small recruitment businesses, they were underrepresented, and potentially because they didn't have a pound note associated with them in the sense that they generated revenue themselves. But if you looked at, I don't know, if you looked at board packs, or you looked at sort of AGM slide decks, the candidates seem to be really underrepresented. And yet, as you say, they are both customer and product in a way.
Well, again, I learned a lot of this from Manpower, actually, and I don't know Manpower at all now. They may well have changed from a philosophical perspective. They're obviously even bigger than they were then, and then they were the largest of their kind. But it was their philosophy was that our role as recruiters is to perfectly match and predictably match the right person into the right role. So unless you have a way of understanding and engaging with the candidate, the contractor, the resource that you're using, understanding what's going to suit them, how can you actually marry that together with the client's situation and their requirements in the best possible way? Now, people will argue with me and tell me they can do it, but the fact is that, and this might seem strange, but back at the time I was at Manpower, and at the time that my wife was running her business very successfully for 13 years, we would spend up to 2 hours with each candidate. And we would go through a very structured approach to understand what were their working environment desires. Where did they like to work? How did they like to work? What environment do they want to work in? Then we would look at their skills, and we would evaluate and test those skills and validate those skills. Then we would look at their experience and understand, well, where have they gained experience that would be useful in the future, and where would they want to get experience going forward? And then finally, we'd look at their interpersonal skills. That's a far cry from what I see in the recruitment industry today. And the financial models that we work with tend to make that very difficult. But the fact is that the quality of that product was very high, and the quality of the margin we derived was also equally high. And the customer satisfaction we had was very high. And the contractor satisfaction we have is very high. And as a result, I mean, the one validation of what I'm saying is that my wife, with what was at the time a relatively small business, but still quite large, won the UK's Young Entrepreneur of the Year award, which was hosted by KPMG and the Times newspaper at the time. This is going back to the 90s. But it was that focus on the quality of performance that I think persuaded the judges that she had a fairly unique proposition. So where am I going with this? I guess what I'm trying to say is that, it depends on what kind of recruitment business you're in, because recruitment comes now in a lot of different flavors. So I'm really talking about one particular flavor, and we can talk about some of the others if you like. But when it comes to, contract recruitment, temp recruitment or whatever, placing people on, into fractional or temporary type roles, I absolutely think the asset is the resource that you get and understanding how well they'll perform in a customer rather than getting the customer. And that's why when, one of my last jobs as CEO of Interquest back in the early part of the 2010 to 2015 period, when it went through its rapid growth and profitability, that's why we focused on, let's focus on the candidate, because the customers will come and, the customers will want that candidate if we've got the right one. And I believe this is kind of really where, some of the other, strong players in the space operate, maybe with a different style, and I keep coming back to companies like S3. I can't remember what their strapline is now, but I know they don't believe they fill vacancies. They make placements, they place candidates where that candidate can be valued and is effective, rather than just fill a vacancy. If that makes sense. Yeah,
no, absolutely does. And you're seeing that, you're anticipating that will continue moving forward in terms of the.
Well, from my point of view, the recruitment industry has evolved and keeps evolving. And I don't think you can ever stand still. And I think whatever I say today might be out of date by tomorrow or next year or whatever. And all the recruitment businesses I've been involved with, we have not once gone back to say, well, what we did before is going to work now. You've got to think about in the now. But at the end of the day, it does depend. I think it does depend on what kind of recruitment you're involved in. I characterize recruitment, principally in three ways, although there are some sidebars to this. There is either the very large recruitment requirements that large companies, with an international footprint want. And I believe what they're tending to buy is compliance. So they're trying to buy a consolidated, simple approach to making certain that everybody we hire fits our culture, our requirement. And that's why they tend to work with, generally speaking, some of the largest recruitment businesses in the world, because they're the only ones that can deliver that kind of compliance. The problem is when you spend that amount of money, procurement get hold of that spend, and they rinse the margins to as low as possible, and they try to take the value out. The second kind of recruiter is the one that focuses on being, the source of the best talent that nobody else can find. So your niche recruiter, and niche is only a niche for a period of time. But the last time I was involved with in a CEO role, the very big focus was around analytics and digital. So we went out and focused on and built out, two of the largest, and I think two of the best providers of that kind of resource in the marketplace at the time, and we grew exponentially, and we had high margins and growing margins at a time when everybody else was shrinking. So there's that very niche focus, and in that niche focus, absolutely the focus has to be entirely on the candidate rather than on the process and the compliance. And then you've got the third component, which is the gig economy, the fractional economy, or the platforms that allow end user to connect with the resource. And that's a growing space. 10 years ago that was 10% of the market, and now I think globally it's about 20% of the market, and it will continue to grow. but it won't, in my opinion, ever replace, some of those other factors. Then there are other, angles to that. There are firms that are now building consultancy practices. Say now, they always have existed, but they've tended to start to grow out, and therefore, are trying to sell, full feature, propositions to customers, and that's growth, and that's higher margin because creating greater value for the customer, and that's a different set of requirements. And then I think the other area that I think has been growing, and I've been keeping an interesting eye on this, is the embedded talent acquisition teams. Instead of selling, with an agency platform candidates, why not go in and be the customer's talent acquisition team? And there are a number of very effective companies doing that very effectively at the moment. So as I say, we live in a fairly complicated universe, and therefore there's not one rule set. But I would say making certain that you understand what a client's requirements are, and understanding what the resource is both capable of providing and how to motivate them in the best way so they deliver the best service, is pretty fundamental to getting the actual end answer correct, which is value for money for the customer, for which they're willing to pay a margin.
You mentioned being the best in this in the space a couple of times. What does that look like to you when you're best in the space? Because it's not about being the biggest, is it? No, it's not. It's about being the person, the resource, the company, the person, whatever. Both ends of that equation come to the client, the customer, the prospect recognizes you as the place. I need that skill. I know that that's the company that can get it for me. And the contractor or talent, perm or contract, is looking for their next job, or maybe not looking, but are willing to take a call from you because they know you might be about to give them something that will interest them. And at the end of the day, this comes back to how do you create value for both parties, and that is, the best value is potentially the passive candidate that's already doing a good job for somebody, but doesn't realize there's a better opportunity for them out there, and you're the one that connects them to it. How would we'll talk about what investors are looking for, but how would potential investors measure that? Because what you're describing is almost reputation that influences behavior. Yeah, I think it does come down to market share in a given area. Now, I say, if we take a specific niche, and I go back, and all right, I'm going back 6, 7, 8 years when analytics, and analytics could be broken down into probably 13 different segments, and we focused on 4 or 5 of them in financial services principally. At the end of the day, the way an investor or anybody would measure your capability in that space is to know how many customers you've got, how many resources or how much talent you're providing into a space where they know there's a finite requirement, and therefore it's a market share that you've got in that particular space. The other thing that you keep on saying is constant reinvention. So how do, as a leader, and if you were sat around the boardroom table, what would you be expecting to see in terms of ensuring that recruiter was, or that business was continuously reinventing themselves? So the first thing I ought to say is not reinventing for reinventing's sake. It's a bit of a cliched word, but it's about being customer centric. And when I say being customer centric, again, I just be clear, I'm talking about both communities, the community of the resources and talent that you apply and use, and the end customer. So somebody in your management team has got to be constantly engaged with customers to understand, and at the right level, or levels, not just one, to constantly understand where the customer's journey is going and how you can best support them. So if you're not spending lots of your time talking to customers on a regular basis, then you are likely to be missing something. And you've got to, of course, be asking the right questions. And I say levels because there are various different levels within an organization which will have a different view and a different perspective about where they are going and
what would attract them to your proposition. And so understanding it at each level allows you then to knit together the best proposition to go forward. And this is true of any business, it's not just this. And where I started that part of my journey was, I never forget, Lou Gerstner came into a failing IBM organization. And the book he wrote on his journey there was called Who Says Elephants Can't Dance? And I recommend it to anybody, because it was a very interesting story about how one of the world's most successful and largest companies pretty much imploded, and he came along, and in my view, it was his leadership that got that company out of the CAC, and very quickly and very successfully. But he was very clear in every address he made, whether it was to analysts, whether it was to customers, whether it was to the internal audience. He was very clear that he measured the amount of diary time he spent with customers and analysts. Obviously, as the president, CEO, and chairman of IBM, he had to spend time with the investor community, and the best way to reach them was through the analysts. And he basically said that 75% of his time was either speaking to customers or analysts. Very little time was spent in meetings. Very little. This was a guy who hated PowerPoint. He didn't want to see in fact, PowerPoint didn't exist in those days, but slides. Didn't want to see slide decks. It was a 1-page or 2-page at most elevator brief, and just wanted to talk and to learn and to understand. And so I've tried to carry that into what I do. I do the odd PowerPoint presentation, I must admit, but ultimately, you can't understand how a market is going to evolve and how you can be the best at what you do unless somebody in your organization is constantly understanding how the market is evolving and moving.
Yeah, it's really interesting that. So that whole listening to the market, listening to the customer piece, which is harder for I'd argue harder for a small business. Let's say you've got 10 or 15 of you in the business where you're pretty full on yourself. So creating that time to make sure you're listening and really listening to where the market's going and what people are looking for is really key.
If you're that small a business, it's likely that you are a specialist. If you're not, then you are going to eventually struggle. But if you're a specialist in something, you'll be talking to the relevant customers, because when you're a specialist, you don't need to talk to the CEO unless it's something that's relevant to the CEO. When we were talking about analytics back in the day, it was certainly relevant to the operational success of certain companies, and it made a competitive difference. So you could get quite high up the value chain. And that's where you get some interesting debate. But I would say if you're a 15-person business in recruitment, you absolutely still can, put the effort and time into talking to customers and prospects in order to understand where a market's going. Of course, there'll be a phase where you're very, very successful and you've got to do nothing but deliver. But every now and again, you need to take time out to do a check on whether you're still going in the right direction.
Yeah, I do wonder whether the loop is closed, though, even if we're spending a lot of time with customers, whether it's clients or candidates, and whether that loop is being closed and back in the business and affects how the experiences evolve all the time. Can I go just to the investors?
Yep.
Because I know you spend a lot of time with both private and institutional investors. What's the sort of appetite as we're here in the summer of 23? What are they excited about, and what will they be excited about in next year?
Yeah, so before I answer that, I just want to get some definitions right so people understand and can interpret what I'm saying accurately. So there are different types of investors. There is the private individual, what we call often the retail investor. There are people that are high net worth, and they may be part of clubs that are venture capital based clubs, so they're providing capital to help new ventures seed and grow. Then you've got private equity, which is a professional private investment business that has got its investment from either high net worth investors and or institutions, and they just have a very single-minded management approach towards how an investment is managed and driven, and typically they use leverage, i.e. debt, in order to support its growth. Then you have the institutions, and there are different ranges of institutions, from those that will and can invest in small private businesses to those that can invest in small listed businesses. And then finally, those that invest in the middle and the high market. Now, where my experience is I do talk to retail, but that's from a listed business point of view. So that's basically I do go to forums where I meet them, but it's more broadcast than it is, two-way dialogue. Where I spend most of my two-way dialogue is private equity. And with the institutions that invest in, typically most of their investments are into listed businesses, but they pretty much all now have anywhere between 5 and 15, maybe as high as 20% of their money in privately held stocks, where they're taking more of a private equity approach to that element of their investment, i.e. a high level of visibility and control. So having got that description, just wanted to be brutally clear. In my view, we've been through a very tough period. The last 9-12 months has seen a lot of investors facing those that are in open funds, so the institutional investors, where you might put your pension money or you might put an investment, but you have the ability to call on it within 90 days. They've been facing lots of redemptions, people taking cash out of the stock market, out of equities, and putting it into bonds or interest-bearing accounts. So we've seen quite a flush out of investment, and what that's meant is to smaller companies is that there's less money to go around, and in fact there's pretty little in the way of discretionary investment. There was also a challenge in that space a few years back with an investor who I won't name, but it was very public. It was all over the press, so people probably know I'm referring to, who created a fund of several billion dollars, and unfortunately invested in too many of the wrong things, ended up with a liquidity issue, and then a lot of people lost a lot of money. So now a lot of those sorts of investors that are in that part of the market do limit themselves to how much they can invest in smaller companies. So that's that. What we are beginning to see, because I do chair a couple of listed companies and have some good and long-term relationships in this end, is I think we're beginning to see an end to that period of divestment and redemptions, and we are beginning to see that begin to stabilize. And I do have a view that what we're seeing elsewhere, including the private equity market, is now a kind of return to markets looking at where can we deploy the cash that we have left. And I do think that with the peaking of interest rates in the States, we're at a near peak in the UK. We're not quite there yet, I don't think. I think we will start to see money returning to the stock market to be invested. And I think the key question there is, will it be invested in recruiters or will it be invested in other things? Private equity, similar story. I'm very familiar with, that there's been a fair amount of divestments by private equity companies over the last 6-12 months. And there's been some fundraisers. Some have been successful, some have actually failed, or haven't quite got there. Part of the reason they haven't got there is because they also go to institutions for investment, and those institutions again are pegged at how much they can invest in that kind of vehicle. So it's been a really tough time. But again, I am beginning to see, and I'm not an expert, by the way, it's just what I see from my perspective, my sort of telescope on this, is that we are starting to see now funds close so that they can start to be invested in new things. And people were predicting, and I'm starting to see it, that the last quarter of this year, i.e. from September, October onwards, we will start to see new deals being done. And then finally, I think the only other component that's also changing matters is the suggested changes to MiFID II and some of the regulations around the institutions and making it an easier place to invest, which is small company Britain, both that being private companies and those that are listed. So all these three changes, I guess what I'm trying to say is there is, I think, the worst may be behind us. I'm hoping it is. and I think there's an upside coming. So money will start coming back into the market. I think there's also an aspect where people are recognizing that there's a window of opportunity before the next election, potentially. There is this age-old issue that's been around for at least 10 years, for the last 10 years in my mind, where people are worried that taxes will change and the various reliefs that founders enjoy may begin to get even thinner or disappear altogether, and therefore, businesses might be coming to market, and therefore capital is trying to be pulled forward to bring into that space to take advantage of that opportunity. So, long story short, I think things are getting better. The key question, though, for your audience is how much of that money will end up in the recruitment space, and what will that money be looking for? And if that is the question, then there are some fundamentals, and the fundamentals are: is this a business that can sustainably grow revenue, retain customers, and generate cash? There are a number of metrics that organizations like that are using, but at the end of the day, you've got to have a quality business that is long-term sustainable. The times of people selling don't know what the right expression is, but a sack of rocks and then running for the hills have gone. It just doesn't happen. You've got to have a quality business, one that can be developed further, that can be grown further, there's long-term value creation to be had, and is cash generative. And as I say, there's a number of different aspects to look at the recruitment market in terms of what sorts of businesses and what sort of characteristics work. And there is interest out there, and I think that interest will begin to evolve over the next 6 to 9 months. Long answer, Gordon. Sorry.
No.
Hopefully, it gives you a picture.
And from an investor point of view, does the impact of AI? Do they say that's just going to be part of the journey, or is that something they particularly consider?
Every single investor that I speak to, bar very few, is asking the question, how does AI affect this business? Now, that's in every business I'm involved in, not just recruitment. So you've got to constantly be recognizing that will have an impact over your future. And whenever you're selling a business, if selling a business is part of the journey, the buyer has got to believe that they can make money, more money, by investing in your business than you are currently. And AI is just another feature that's going to impact that, that journey.
Yeah, no, fascinating. Final question. I'm conscious of time, Mark. I'm just really interested in the sort of questions that you think, let's say, a recruitment business owner should be asking themselves continuously. And I guess if you're sat around the boardroom as a chair or NED, you are asking of that board. What are those 2 or 3 killer questions that we should be asking ourselves?
I think it's really simple. And tell me if this doesn't answer the question that you want answering, Gordon. But the first thing is, where is it we're going? What's the where is that? People talk about North Star. I just like to say, where are we intending to be, 2 or 3 years from now? Where are we on that journey, and how are we going to get from there, from where we are to there? That's the only real questions to be asking. Now, there's a whole host of areas beyond that build into that, but depending on what the answers were at the beginning to that question, kind of depends on how you then respond to the answers you're given as you're going down through the journey. But the biggest question, I think, is where are you and where do you want to be?
Love it. Absolutely love it. Mark, it's been a pleasure.
Thank you.
And thank you for sharing your experiences and your thoughts and your observations about leadership, investment, and various other things. Have a great rest of the summer. Thank you for joining us on the TRM podcast.
My pleasure.
We will see you soon.
Yeah, no, thank you very much, Gordon. Appreciate it.
Don't forget to follow the TRM podcast on Spotify or Apple Podcasts for a new exciting episode every week.